Welcome to the Transportation Exchange podcast. I'm your host, Jason Cuddy, and on today's episode, we welcome Lise Longlade, who's the Business Development Manager of Transportation with DLL. Lise, welcome to the podcast.
Thank you, Jason.
So I wanted to get to know a little bit about yourself in the background, how you got involved into the industry and, to the role you're in today and as how most people know you.
Well, a long time ago in a far, far land, I graduated from Guelph University in geography, and there were no jobs. So my maid of honor at the time was working for Pacific National Leasing, and they needed a customer service rep. So they hired me on. Went from there to collections through a whole host of different leasing companies. Had my 3 kids, and then ended up back at DLL Financial, hired under my original hiring manager from when I started in the industry. So I came to DLL on a contract basis for collections, and then moved into inside sales about 10 years ago. And 8 years ago, took over the transportation portfolio for Ontario, and here I am.
Excellent. Yeah. And I know a lot of us know working with you, a lot of our customers familiar with DLL, one of the partners we work with at Rush Truck Centers for the financial side. But I know when I was kind of doing a little bit of digging, I wasn't fully aware of how big a DLL is and how big, I guess, your parent company is in whole. Maybe walk us through kind of a little bit of history of DLL and the size that you guys are on the world stage.
So it's funny because you're not alone in that. We actually are represented in over 30 countries globally. We're owned by our parent Rabobank out of the Netherlands, and we started DLL Financial or De Longlade and Financial Solutions in 1969. So just a couple of years ago, we celebrated our 50th year in business, which is a huge accomplishment for not too many companies. So I'm very proud of that. And we moved into the North American market in 1998. Kind of started in the office equipment world, more small ticket. So things under 50 grand, if you will. And then we moved into construction and transportation full blown a good 10 to 12 years ago, I would say. So our go-to-market strategy is to partner with dealers and manufacturers. And we do a lot of direct business in the transportation segment, but in our other segments, we handle agriculture, inventory finance, construction finance, material handling, healthcare, office equipment, office technology. So we have about 10 different business lines that we manage and partner with global manufacturers.
Very diverse. And I think given what we've went through last year and are kind of climbing out of, and even still what we went through in 2008, partnering, for our customers, partnering with a lender like yourself who is diverse in the lean times definitely has helped you guys weather them, but also lend during those tougher times.
Absolutely. And it's funny. So we do direct lending under De Longlade. We also do what we call private labels. So we'll partner with different manufacturers under their label. So one of the things that I often get asked by end users is, what broker are you using or what bank are you using? And they're very surprised that we're actually the lender and not a broker finding money for them somewhere else. And I used to say, probably when I first started, who the hell is DLL? Because really nobody knew us. They all thought that we were just some little shop somewhere in Oakville that was finding money elsewhere. So our diverse portfolio, how deep we can go with our partners, how large we are on a global scale really allows us to continue lending in the great times and in the lean times as well.
Yeah, I do believe a lot of people were under the assumption originally you guys were a broker. I guess there are so many around, and usually the large lenders by default are banks, which, inherently as the background you have behind you, but, we're used to what we see here as, the main 3 or 4 banks kind of being the lenders. So it's nice to get some clarification that you guys actually are, for lack of words, the money. You're not out brokering the deals for people. You're actually, stepping up and actually owning the paper that's on.
Yeah, it's funny that you say that, because that's often my answer is we are the money.
Yeah.
So it's, yep.
So with regards to money, and I know I've come across with a lot of my customers, so, there's obviously different ways to structure deals depending on what customers are looking to do. From I guess my exposure, and maybe you can speak to what is available when you get in more, I guess, specifically to the transportation side, but we've seen some finance leases, straightforward loans, and some fair market value leases. Maybe walk us through, what the difference is between each of them, as people are considering different ways to structure, the financing part of their deal.
Yeah. So typically what I'm seeing with, say, the owner operators or smaller businesses, ownership is still key. So loans and finance leases, or what we call capital leases, to a very small purchase option, maybe $10 or $100 at the end of term, makes sense for them. They want to have that equipment. They want to build equity quickly into that equipment over a period of time, typically 4 to 5 years. And then that's an asset that they can put under their company or their own name if they're a sole proprietor, and it has value to them. Some of the options or different products that we offer that are more suited to mid to large size customers are our operating leases or fair market value leases. And so that serves a purpose in that they're expensing on a monthly basis. They don't necessarily need to own that asset at the end. For accounting purposes, beknownst only between them and their accountant, this is the way that they need to hold their assets. So they're matching their cash flow. The money that asset is generating covers off the cost of paying for that asset. And at the end of term, they can decide whether or not they want to own that asset, or they simply return and get into something new. Some of our larger customers, it's in their business framework that they need to have a fleet of equipment that is 5 years or newer. So that operating lease makes perfect sense for them, because they can flip into something new all the time. And DLL is really well equipped to manage used assets, because we have a wonderful asset remarketing team as well as an asset management team. So we know this market, especially in transportation and construction. We're comfortable with taking those assets back. And so this is a really good product that DLL brings to the market.
Yeah, I've seen it obviously quoted and used quite a bit from customers, whether my own or other guys in the office. That is a little bit, I don't say unique, but because of the background you guys have, the asset management team you have behind you, that fair market value option to consider is a little bit kind of unique to what you guys can bring to the table versus potentially other lenders, that it gives some different choice for the customer to look at.
Yeah, I think what you're finding nowadays is that you pay for use. There's so many things in our daily lives on a personal level that we just pay for use, renting a water heater or, anything like that, where somebody else is taking the ownership and the responsibility of maintenance, much like your ideal lease product. And so this is kind of where I see our financing going forward, not just DLL, but as a whole. This industry is working with our customers to service their needs on a term basis. And it's not so important that they have an asset that's going to get old and need repairs and, will become redundant as electric vehicles come into play, say, or something like that. So this fee for service model works really well. And I think we're way ahead of the rest of the industry in that product for sure.
Yeah, and I agree. And it gives the customer some flexibility, like you said, as markets change or needs change, that flexibility to not be tied completely into the the whole financial life cycle of the vehicle, with kind of a fixed
Exactly.
out that they can work around, I think is huge. Like I said, especially a lot of the larger fleets have some sort of time frame, or it's a customer driven from their end that they can only have certain age equipment in their fleet. So in order to run it and be competitive, this is structured a certain way that allows them to do that.
Yeah, absolutely. Absolutely. Downtime is lost time. So
Yeah, and market wise, as you see trends and different demands, do you see? I mean, obviously we've gone through last year. We see things picking up. Do you notice any different trends in any of the different offerings you guys have as the markets change, or even as technology changes, kind of as you related to with the FMV for newer technology potentially?
yeah, I think that's the biggest market trend, is that we're moving forward into an age where it's all instant gratification. Everything is, my needs are now. I'm not necessarily planning for the future that far out. So companies all over, no matter what industry you're in, you need to create products that are servicing the needs now. And again, with financial products, we're changing constantly. We're looking at different industries. We're looking at different ways to accommodate the needs of the customers. And truly, I think the trend is still and going to be growing in that operating lease space, or that needs space, if you will, as opposed to ownership space. But that, again, that is still targeted at certain types of customers. Your 1 and 2 truck guy, I don't think will ever go that way. I don't think they'll move away from that need to own something. Maybe as those 1 and 2 truck guys get older and this new generation comes in, where everything is a little more, I don't want to say a little more material, I guess, and instant, then maybe the trend will go that way for the smaller customers. But right now, I think all the products that DLL offers and the products that you see out in the market will continue on and stay the course no matter what happens with the fluctuations.
And I've seen from past lives, which was kind of eye-opening for me, because a lot of what I had done before was operating leases, whether it's full service leases or long-term rentals. So that was kind of my exposure to everything. And then when I started getting into more the retail play of it, I got to see how different people would structure ownership on both sides, on the power side and on the trailer sides, specific to transportation. And I found kind of what you were saying here with the fair market value versus, full out, on the books ownership position. I found with the equipment that lasted long, trailers that, could go 10 years or more, depending on how well you maintained them, those guys would traditionally take an ownership position in those.
Yes.
A lot less cost, a lot less kind of exposure to, a residual value really tanking based on equipment failing versus on the power side. And then I found on the power side with what we're doing now is people will do a fair market value or not necessarily full out ownership on it and move it out in 3 to 5 years because of, either extended warranty programs that cover to match the term of the deal, technology, fuel mileage changes. There's a lot of things that change in 3 to 5 years on the truck side.
Yes.
Compared to the trailer side, then that structuring it a certain way gives you, a chance to replenish your fleet. Well, the stuff that doesn't, for lack of words, expire technology wise or fuel efficient wise as quickly, you can own that a little bit safer, and you're pretty good in the back end when you do go to sell it.
Absolutely. Yeah, for sure.
So when you're, when I'm talking to customers, or if we're involving you in the conversation and you're talking to someone, some of the things to consider, what are some things, I guess better to say, that customers should consider when they're looking to structure? Obviously, there's the on and off books, and you said that's an accounting thing. That's a separate thing between them and their, that side of the business. But what are other things, whether it's residual values that you mentioned, or I guess our cash flow? What are some of the things that, we talk to customers about when they're considering which option to run with?
Well, I mean, every option is available to any customer as long as they credit qualify, and that is that's the key, right?
Yes.
So, it. I think in every instance, it all comes down to what can I afford on a monthly basis, and so you structure around that. If, let's say, an owner operator is looking at a new truck, he probably doesn't have 170 grand sitting in his bank account where he can just buy it outright and then, depreciate it over time. So he's going to have to work within his monthly means to pay for that. Either he puts a large chunk up front, and so he gets equity into it right away, and then that allows him for a smaller payment monthly, and he owns it at the end. That accomplishes that. If he's strong enough from a credit perspective, then he could actually push some of that to the end of term, and he has a larger purchase option and still achieves the same monthly cash flow. One of the things that I find really great about our company is that our credit officers are very savvy in the transportation and construction markets. And so they understand the needs of structuring a deal so that we can help the customer make his payments, essentially. You never want to put somebody into a position where they're going to go delinquent. And we structure with that. So we'll work with the different profiles of the customer to achieve what he needs in the way of structure, either money up front or money at the back, and achieve what we need, which is paying customer through the term to the end of, to the ownership part. So when customers are looking at purchasing equipment, whether it be new or used, they need to keep in mind what they can afford on a monthly basis and what they're willing to put into a deal. Now, that will change as the size of the company changes, obviously. So, and credit's attitude towards that application will change as the size of the company changes as well. And a lot of things play into it. How long have you been in business? How, do you have equipment financing history? For the smaller guys, have you managed your own business for a length of time? Or are you just getting into it brand new? And maybe that doesn't fit into our model, but there are lots of other leasing companies that have those models that can accommodate those customers. So really, I guess, the customer needs to figure out why he's acquiring the equipment, how he wants to acquire the equipment, and what he wants to do with it at the end of term that will help us structure something that is safe and profitable for him.
It makes sense. And it's a good conversation to have because every business is different, right? Everyone is unique, how they want to structure it, whether they want it on or off, the balance sheet, again, will drive certain conversations. And all of it, I guess, clearly goes back to the credit strength of the companies or the individual. That kind of drives a lot of the conversation. And obviously, the stronger you are, obviously, a few more options available to potentially play with. To consider.
For sure. And it's so important to be able to speak with these customers to find out where their headspace is at, because there's a lot more to the story than just numbers on a page. And that's one thing that we always try as experienced sales reps in the finance business is to find out the story, because maybe there's little things in there that can overcome a poor cash flow for 1 year, or the fact that he's not a homeowner. Well, he's on the road 80 hours a week. Why would he own something that he's not going to be in? That type of stuff. So, it's the one thing that I could say is if the customers can be completely honest about their situation and what they need, then it allows us to work much better with them.
Yeah, and that's sort of our job as a salesperson with the equipment side, that as we pull you guys into the finance side, that we make sure we share that with the customer. Here is why we need to kind of dig a little bit deeper, because like you said, you can get, audited financial statements, and that's great. And strong numbers will show strong numbers. But, especially after the year we've been through last year, people may have structured things differently. They may have had to, the new word, I guess, going around, they may have had to pivot as far as how they look at things. And so on paper, that may not look great. or it may show a different side of the story than what they're truly trying to do with the equipment they're looking to bring on board. That a conversation may completely change, the outlook as far as what risk you guys are willing to look at or consider, for their purchases.
Absolutely, bang on.
And so I guess tying to that would be, clearly credit and being open and honest about what they do helps. But we do have a lot of new people entering the business constantly, whether it's an owner operator side who needs, who's got a job with a larger fleet, or, you and I've worked with brand new companies, new startups, new ventures, new franchisees that, during COVID and people have maybe lost their jobs. So they found a different way to generate some revenue, and they figured this is the world to go in. But as you mentioned, brand new business, and if they don't have a ton of oomph behind them from a credit side, what are some things new businesses or owner operators can do to kind of help build up their credit before they kind of get to you guys to start looking at lending?
Well, A and B lenders for brand new startups and new owner operators probably are outside of the scope of where they can go. So unfortunately, just like you and I, when we were coming out of high school and university, we had to pay the higher credit rates in order to establish credit. And that's what companies need to do. I do see a lot of newer companies who have assets, but they've bought it cash. So there's no history there. There's nothing we can grab onto. They might have an opening balance sheet or opening statements, but of course they're not going to look great because they're just starting a company. That we can't assist with. So one of the suggestions that I would have is if there's any way to create a financial tracking, do it. You're maybe going to pay a little more right now, but that's the pain of starting a business. It won't be long before you can get into those A and B lenders or even the C lenders. There's an option for everybody out there. It may not be DLL. Not that I'm pushing business elsewhere, but we all have a place to play. There's a pie, if you can put the saying, and there's lots of pieces, and we all get a piece of the pie. So somebody looking to establish credit, looking to start a business history, needs to start a bank relationship, needs to finance some assets, be they small, create some traction in the finance part of their business, pay their bills, personally and corporately. Some new companies are formed from partnerships of owner operators who have lots of experience. So those owner operators need to guarantee those companies, but they should be able to do that because they believe in the company and what they're moving forward and doing. So it's, transparency, start good established relationships, I think is the best way for those companies and those smaller businesses to get off the ground and get going.
And it's good to, for them to understand that, because I think a lot of times they'll come to us and want to buy, a piece of equipment. And I know a lot of times, and I'll ask you constantly, is what's the interest rate? What's the interest rate? What's the interest rate? We're constantly asked that, which I understand. And it's usually, this is the rate with a little asterisk, meaning, again, like you mentioned, if you fit the parameters, yes, that's roughly where you're going to be. And it's nice for us to be able to be upfront, again, talking to the customer and them being honest with us. We can at least be upfront and say, okay, if you're a brand new startup or if you're a new owner operator, there's ways we can get you there. We need to really understand what is your current setup, and you need to understand that, you're probably not going to get that rate that you're seeing, which is fine. Sure. You'll get there, but like you said, you had to build up some time, build up some equity, and there's going to be some guarantees and whatnot to assist them throughout the way. But at least by knowing sort of where they fall in the kind of, credit risk world and what they need to do to kind of build back up will help give them some direction.
Absolutely. And, Rush has a wonderful finance office, and Carol has a whole host of avenues that she can take your customers. And you guys are excellent at using your finance office. And I would continue to do so, because with your finance manager's experience, she'll know where to place those customers as well. I mean, we can quote all day long and we can say this, and you're going to get customers who say, well, my buddy down the street got 3.2. And you're going to say, well, your buddy down the street's been in business for 20 years and,
Yes.
runs 50 trucks. So yes, he probably got 3.2, but you, however, will not. So it's a tricky slope because, you never want to make somebody feel like they don't deserve the best interest rate, the best service, the best equipment. Your job, Jason, in selling trucks is to sell the best in the industry. And so, you want to make sure that the truck that you're offering your customer is the right fit. And a finance company should make sure that the product that they're offering your customer is the right fit as well. So it's a tough industry. It's a fun industry. You get to learn a lot about people. Not everybody's the same, and our customers don't want to understand that all the time.
Yeah, no, I mean, definitely, everyone, like you said, wants to have the best rate, the best terms, and why wouldn't you? And I understand that. Yeah, sure. But at least if you can be realistic with the expectations on all sides. I mean, we're no different on the product side. Everyone wants the most fuel efficient vehicle and wants to be this and for this price, and we don't necessarily check all those boxes either. But we find the right fit for the customer, and like you said, pull in Carol on our finance team and work with her and partners like yourself to find the ideal fit based on their current situation, and hopefully that will help them get a little bit further up the order in a couple of years and build some strength and build some credit behind them that makes them a little bit of a better financial risk going forward for lenders to then bring the rates down.
Exactly. And we actually, you and I have had a couple of deals of late that kind of fit that profile of new businesses, experienced owners who understand that they have to build credit. And so they came forth with more into the deal, and guarantees and stuff like that. But I think they see that in 2 or 3 years' time, they will have established that history and they'll be better suited to get the next truck and the next truck and the next truck, and maybe not have to put 50% and maybe put 40 or 30 or 10. So you're right, because I think those few deals was a great example of the partnership between Rush and DLL and between you and your finance office. And those are good feel stories.
They are. And it's nice to, watch these companies grow. It's nice to be there and as a partner, with you guys and, with us for a new customer. It's hard to get customers. It's hard to retain customers. So if you can help them as they're starting out, that's part of the partnership you go for. Try and find a partner on the equipment side, on the finance side, so that they know, like you said, as they grow, it's one phone call. I've got my people in place. They know our story now, and they can help us grow, right? And so those are all nice things you're able to do. And in cases like those, like you mentioned before, understanding the cash flow, understanding that monthly payment, I think is huge for a new business, because they knew where they needed to be. They know after a certain threshold, it's not viable to carry for that much money. So
yes, exactly.
But we can have that conversation, say, okay, here's the capital cost of the equipment. Here's where they need to be in a monthly point of view. Here is their credit app. How is there any way we can structure it that hits that number based on the information you have to work with? And that's what we're able to do. But I think, again, it goes back to what you're saying before, is having that open conversation with the customer, letting them explain to you what they're trying to do. You explain to them what are some options that we can do based on where they are in their business, and then try and find a way to connect those two dots and get them on the road with some equipment, which we're able to do. So, but I think, again, it speaks to the size that DLL is and the backing you have and the diversity you have. You understand the market, you understand the players, you understand the equipment, and you're able to see, where where there is some good market growth with some of these newer customers, as long as they're willing to do their fair share to make the deal make sense. So it's but it helps. It helps being able to have someone like yourself talk to the customer directly and walk through that as well. So it's been a good partnership that way. But it's good for the customers to know what to expect, and it helps us to relay the information to the customer of, here's what you need to know as we move forward, so that there are no surprises. So they go in, they know what the cost of the truck is. We've showed it to them, but now how does it actually make sense in running a business? And that's where we lean on you guys for.
Yeah, well, happy to be here for it.
Well, excellent. Thank you for the information, for digging into the different structures that are available for the different people, and a bit more of background on DLL, which, like I said, I wasn't fully aware of the size you guys actually are, and I think most people listening will get a better understanding of why you guys are the player in the market that you are, and why we partner with you on a lot of deals. And I want to thank you for taking the time today for being part of the podcast.
Oh, thank you. Yeah, this was, it was exciting. I was really happy to be invited to do this.
Excellent. Well, it was fun. Well, thank you again for joining us, and be sure to like and subscribe for notifications on new episodes. As well, be sure to share this podcast on your social media channels, and check out our website at www.rushtruckcenters.ca to catch up on some old episodes. And once again, thanks for listening.